Well, howdy there, folks. Hope everybody's doing absolutely tremendous out there. We are about to go through a very shocking move in the stock market, a move that really no one sees coming. And I want to go through this with you guys and how this all transpires, everything that's correlating here, and many other various things. And I think this is an important video because obviously so many people were caught off sides by this year, right? The market's gone up so much, so many stocks have performed very well. Other stocks have severely underperformed the market, and you have a very divergent view on where the economy is going in the future. Are things going to get better from here? Are things going to get worse? And many other various things. So we're going to have a lot to get into in today's video. I hope you guys enjoy. As always, I appreciate every single person subscribed to the channel. Thanks so much for being here, folks. And I hope you enjoyed today's video. I hope you get a lot of value out of it. A lot to go through in this beast here today. So sit back, maybe put it on the big screen or something like that, because we got quite a bit to go through and for me to explain here. And also, when this video is over today, if you want to access my new free workshop I put together for you guys, check out the pinned comment down there. I can send it over via email or text, whatever you prefer. And that's how I pick 10x stocks, okay? So we all know about big tech doing tremendous. We all know that story, right? I mean, these stocks have been doing excellent this year, right? But something is starting to occur that is, let's just call it very surprising. So every day, pretty much, very shortly after I wake up, right? Usually I go on to TradingView, right? Monday through Friday. And I have a ton of different watch lists on TradingView, but my main watch list, it looks at the indexes I have on there, and then I have my current stocks. And so I click on that, and then right away I click this little tab and I go to, whatever the percent changes. And the reason being is, once I get into the market, I care more about whatever stocks I'm holding that are making outsized moves up or down on that given day, right? So I can just kind of see, why is this stock going up so much or down so much, and then kind of review it. Well, today I noticed something very, very shocking, and this is what I noticed, okay? I go to my biggest underperforming stocks and overperforming stocks, and there wasn't really much happening with the underperformers, but the overperformers. Look at my top 5 stocks here today, right? Fubo, 18% move here today. What's going on with Fubo? Avant, a 10% move here today. Palantir's an 8% plus move after the move Palantir's already had. Corsair Gaming's about a 6% move here today. What's going on there? And the Planet. Those are my 5 best stocks here today. Okay, that is very surprising, especially on a day when I was taking the screenshot, the S&P 500 was actually red. And so this is very, very telling of what's going on here, okay? Now, first off, Fubo, right? What is going on here? This stock's up 165% in the past 3 flippin' flapjacking months. Does somebody know something, okay? Stock's up another 18% here today. They got earnings coming up on Friday. Who's buying all these shares going into the earnings unless they have some sort of material information? Because to send the stock up this much, this fast, is very surprising, especially when the company has earnings coming up here in a few days like that. That's a big risk, right? And you say, well, why not just buy options? If you're confident that the move's going to be the upside, why not just buy some options? Why are they buying shares straight up and sending the stock up like that? It's very, very surprising, right? And you look at the volume. Now, I took this screenshot about, because this is a pretty long video, so it took me a couple hours to kind of prep this one, right? When I took this screenshot, there was still almost 2 hours left in the trading day, and almost 28 million shares had traded hands. The average volume for Fubo is about 15 to 16 million. Okay, so it shows you something's going on here, and it's very surprising because here we are with the situation, and this is before football season even starts for Fubo, which football season is always the huge boost up for Fubo, because obviously it's the main service you got to have if you're a football fan, especially college football, but even NFL football, they got the best package for that out there, right? And so here we are, we're still a month away from football season, and the stock's making this sort of move. But there's some interesting things. Maybe somebody knows something about the numbers, and so they're trying to get ahead of that. Or maybe somebody knows something about some sort of potential buyout or something like that. Because I will say, of companies, smaller cap companies I know of, this is probably the most attractive buyout candidate out there, in my personal opinion, because it's a streaming player, right? It's the future of TV, right? There's YouTube TV, then there's Fubo. Those are really like the future of TV, because obviously a lot of people are getting rid of satellite, cable, they want a streaming service, right? And so there's a lot of buyout candidates, that would be looking at a company like Fubo. This could be like satellite companies. This could be typical old cable companies. This could even be a company like an Amazon, right? We know Amazon's not shy at all about buying out, let's just call it assets that they could see as long-term, very attractive businesses, right? And we know Amazon's very focused on trying to get more and more into streaming and more into entertainment. You look at what they're putting out with Amazon Prime. You look at them starting to buy different rights for sports, obviously with Thursday Night Football, things like that. Could Amazon make a play here? It's definitely a possibility. And, you could say Fubo's a money-losing company right now, but obviously they're cutting losses dramatically, and Amazon's not afraid to lose, $100, $200, $300 million a year on that business when the revenue opportunity is what it is for this company long-term, right? You could even look at a company like Apple. Apple seems like it's getting more and more focused into sports. Now, usually Apple just starts their own service of some kind, unless there's some sort of strategic idea there, kind of like what they did with Beats, right, where they acquired another brand and then just continue to build that brand. So there's a lot of players. I don't know, man, but I will say that it's very strange to see that stock making that insane of a move, because I couldn't find any upgrades from any analysts or anything like that. So it just felt like does somebody know something? Palantir stock. What in the world is going on with Palantir? I can tell you what's going on with Palantir, okay? So this stock making another 8% plus move here today. We're up another $8,500 on the stock, by the way. Congrats all Palantir shareholders. Palantir, I was thinking like, if this stock did really well after earnings, maybe we go to the $20 to $25 range, right? It could be $20 to $25 range before we get to earnings. Like all we need is like another day or two of the stock being up and we'll already be in the $20 to $25 range, which is shocking, all before earnings, right? And, if you know me, I'm not a huge options fan. I usually just buy options for hedging, but, I did decide recently to buy a little Palantir calls, and so far they're printing a little bit of money. They'll just put it that way. We'll see how all that trades out. I'm not a big options person, believe me on that, other than to hedge my portfolios. But yeah, I saw some $17 calls, 2025, and I was like, I got to make a little move there. So we'll see how all that transpires over time. So what's going on here at Palantir? I can tell you what's going on. This is an overflow effect from the Dan Ives move, right? Dan Ives comes out and calls Palantir the Messi of AI. We'll see. Obviously, whatever Karp and the team has to say about guidance is going to really let us know, is this really the Messi of AI, right? And so he comes out and makes that call on Friday. Stock moves up big on Friday, right? And then a lot of people, when they look at an analyst note like this, they don't make an initial move. They kind of wait for the next week. And so I believe this is kind of an overfill. But the other thing I think is interesting, right? And I covered this on my reaction channel. I don't know if you guys follow my reaction channel or not, and shout out to everybody that follows the reaction channel. Let me know in the comment section if you also are subscribed over the reaction channel. I appreciate y'all, okay? But I created a video, right? That talked about Palantir stock, something strange happened, right? And there was a video where I reacted to Amit, who's pretty big in the Palantir community, talking with a couple other gentlemen about Palantir stock, right? And the thing that was very, very strange was, why did Dan Ives come out and, say this and make this move about a week or so before earnings, roughly a week, maybe a little over a week before earnings are going to come out? It's very strange to do it then, and why not just wait on that, right? And so we discussed that in the video. And so I'm wondering if more folks are starting to pick up on this and saying, why would such a super famous analyst like a Dan Ives come out and make that move a little over a week before earnings are going to come out? Why not just wait till after earnings, unless maybe he knows something about these earnings? So that's where things get really, really intriguing. And we'll see how it all shakes out. But it's I can tell you Palantir is red hot right now. But in order to keep this red hotness, right, in order to keep what's going on, and in order for the stock to make the next run, right? And I remember I told you guys recently, like, how does the stock go from $16, right, which was where it was a week ago when I made this comment, to $32? I'll tell you exactly how it does it. Karp comes in, nails numbers out of the ballpark, talks about profitability is going to be much better than they were anticipating moving forward, and he talks about revenue growth rates getting to a much stronger state than what they had anticipated, and maybe he puts out there that we expect the company to start growing 30% plus a year for many years to go in the future, right? If he comes out and says that, then we're back on. Then we're talking big dog, because then we could be talking about profitability, way more profitable company than anybody anticipated. Then we could be talking about, obviously, S&P 500 inclusion, slam dunk, right? And then we could simultaneously be talking about a revenue story that is back on track, right? Because the thing that attracted a lot of people to Palantir back in the day was Carp said we were going to grow 30% plus. Then we stopped growing 30% plus, right? And 15, 20% type growth rates, and people started to fall asleep. If all of a sudden we talk about 30% plus is back, we're back, baby. That's how we get to $32 a share and the stock starts pushing 30 plus, okay? And then we can kind of go from there. Avant Brands, okay? Avant's up 63%, almost 64% in the past month on this one, right? And the story with Avant's pretty simple. This is not a Wall Street stock. This is not going to be talked about on Wall Street like a Palantir or something like that is. But I think it's just, at the end of the day, this is a more of a retail stock, like people in the know. And I think this is just kind of like one of those stocks that people are looking at and they're like, oh my gosh, this company's getting close to profitability. Oh, we're switching up the cameras. This company's getting close to profitability. And the revenues are just skyrocketing for the company, and the opportunity is ridiculous for the company long term, obviously. And so I think it's just some money flowing in the stock. My hope is Nort can get this company to net income positive quarter in, quarter out, because that's the next massive epic move Avant makes, is if Nort can get this company to a positive net income quarter in and quarter out. We're just talking about that would be a game changer, along with nice revenue growth. I mean, oh my gosh, the sky's the limit if the company can do that, and it's getting pretty darn close at this point in time. So, we hope we get over that last kind of let's call it hump here, and then it's off to the races even more, right? Corsair making a big move here today, right? Stock's done pretty good year to date. It's outperformed the S&P 500 so far year to date, not outperforming the Qs, right? Up about 28, 29%. So Corsair Gaming rises as Wedbush upgrades stock rating to outperform shares of computer component seller Corsair, which if you don't know, Corsair owns not just a Corsair brand, but they also own an Elgato brand. They own a few other brands, but Elgato's the other big brand they own, and Elgato makes streaming equipment and things like that, microphones, cameras, all that different type of stuff, okay? Brokerage Wedbush raises rating on Corsair to outperform from neutral, while also raises price target to $21 from $17.50, right? Which, the stock been trading kind of in the $17 range recently. Brokerage says Corsair is well positioned against peers to return to near-term profitability, okay? How do I feel about that? Do I think, Corsair's profits are going to start tearing it up over the next several quarters? In my personal opinion, absolutely. And the reason being is, and I've talked about this several times on the channel, freight costs, shipping costs, all those things have dropped dramatically. Those were things that held back Corsair in a substantial way. Plus, we had a goods recession, right? We came off of everybody was buying computer equipment and that type of stuff, like crazy streaming equipment, right, in 2021. And then starting, especially, in 2022 and kind of going through the beginning of this year, it was a huge holdback, right? Retailers had too much inventory. Corsair had to clear out that inventory. Sales were slower. Now we're in a great inventory spot moving forward. Shipping costs are way down. Freight costs are way down. And so what's going to happen here, in my personal opinion, is Corsair's margins are going to increase rapidly over the next several quarters, and the profitability of the business will increase rapidly over the next several quarters. Even without incredible, revenue numbers, the company doesn't need to grow revenues 20, 30, 40%. It doesn't need to see their profitability increase rapidly over the next, year at least, okay? And so that's pretty appetizing here with Corsair. Adds Corsair stable with its products in geographical mix to benefit from domestic market rebound as its European market inflects and Asia market rebounds further after slowed growth in 2022. With its healthy inventory position, Corsair should see an earlier replenishment of peripherals, says Wedbush. 4 out of 8 analysts rate the stock a buy or higher, while 4 have it as a hold. Median price target is 19. So the thing with a stock like Corsair, right? I obviously own shares of the company. This is not like some game-changing stock in terms of what can happen with the stock price. I like to hold it. It gives me good diversity in the portfolio. This is one of those stocks that if it was to go up rapidly, I would probably end up cashing out my shares. This is there's certain stocks I hold that are just like long-term great holds for me. Some of the stocks that come to mind are Meta, Tesla, Amazon, PayPal. Those sorts of companies are just ones like I can't even see myself selling out of anytime soon. Like it could be potentially a long, long time in the future, right? A company like Corsair, if this went on a big beast run over this next 6 to 12 months, I can see myself cashing out of shares, because this is not a growth story that has like unlimited potential long term, unless they do something fundamental with their business to kind of change things up here. So that's kind of where I'm at with Corsair, but it should definitely be in next several quarters of pretty exciting numbers out of Corsair. We should see those margins increase rapidly and profitability increase very rapidly. No, Meta. You might have seen Meta here today, right? Meta, where's Meta at, man? It's not making a move here today, right? This is very healthy for Meta, right? It needs a breather. This stock has been running and running and running and running. It needs a flip and flapjack and breather. And so a day like today is a very healthy day for the stock, and I'm happy to see it actually take a breather for once, because that's healthy, okay? I mean, this stock has been just running non-stop. And don't be surprised if it starts running again, okay? Now, let me explain something extremely important to everybody watching this video right now on what's happening, what's going to happen with this market moving forward, how this is going to play out, how it's going to shake up your portfolio and those sorts of things, okay? So, the market bottoms in mid-October 2022, right? At that point in time, the bull market starts. Now, what's interesting is over the last 9 months or so, as we've gone on this bull market, it's been different stocks performing at different times. It's not like everything just goes up at the same time or down at the same time, right? And so at first, when we kind of bottomed out that market and then we started to move the market up into the end of the year, right? At first, it was like the safest of the safe stocks were what was moving us up. And you can look at the stock charts of these stocks and you'll see exactly that. Stocks like Apple, stocks like Microsoft, stocks like JP Morgan, the biggest financial out there, right? Look at where those stocks bottomed in mid-October and look at the moves up into year end. That was what was moving the market at that time, because that was seen as, some people said, okay, the Fed has done the majority of their work. We're likely going to trough earnings over the next couple quarters, and then things are going to improve from there, right? So far, that looks pretty darn accurate. It looks like the Fed has done most of their work. It looks like inflation's coming in where we need it to come. We should see a CPI in the 2s when the next report comes out here in a few weeks. And it looks like that is pretty darn accurate. So it's not like right away people are saying, I want to take super big risks. They're saying, let me start nibbling on some of these safer stocks, right? The Apples, the Microsofts, and the JP Morgans. Now, as we got into 2023, guess what starts to perform, right? The riskier big tech stocks. Keep in mind, a stock like Tesla, which is usually seen as a risk-on, risk-off stock, Tesla was still going down all the way into the year end. So you saw these stocks performing, you saw the indexes performing while Tesla was actually still going down into year end. But Tesla doesn't get grouped into the super safe stocks. It doesn't get grouped into Apple and Microsoft and JP Morgan. It's grouped into this other category of like riskier big tech. You want to take some more risk, you buy something like a Tesla, right? It's an outperformer or an underperformer depending upon if you're in a risk on market or risk off market, right? Now, Tesla, Meta, Nvidia, AMD, those sorts of stocks started to catch a big bid at the beginning of 2023 and as we kind of ticked along and we went on this bull run. Now, very recently, and I'm really talking over the last, let's call it 2 or 3 months, we've started to see some small cap stocks start to perform, right? Remember what we started the video with? We were talking about Fubo toward the beginning of this video. Fubo up, what was that performance for Fubo? It was ridiculous. Just in the past 3 months, what was that performance? 165% in the past 3 months. Okay, that's insane. Okay, 165% in the past 3 flip and flapjack months, right? So that would fit into the smaller cap. That would also fit into like high growth stock, right? And we've even seen some regional banks start to outperform, right? Regional banks were getting hit heavy back in around March, April, a little bit into May. And then over the past couple months or so, or even a lot of these regional banks have started to catch a bid. I was watching CNBC, this was last week, and I saw one of these regional banks was, oh my gosh, it was up like 27% in a day, which goes to show you some of these moves that some of these regional banks are making now at this point in time, right? Now, where does the market move from here? And I'll tell you exactly where the market moves from here if we continue to take this baby in a bull market. Let's assume for a minute the economy stays decent. Maybe even things improve a little bit more. Let's say we get that CPI in the 2s, which would make the inflation worries even less, and even the worries about the Fed even less, right? Let's assume for a moment, the economy continues to hold and maybe even gets stronger. Consumer sentiment gets even stronger, and people start feeling pretty good about the future of the economy, much better than they were certainly a year ago when consumer sentiment was the lowest as far as Michigan consumer sentiment we ever have seen, right? Well, the stocks that start to perform in that sort of market, if that's what's about to happen, are going to be stocks like retailers. You're going to start seeing stocks perform very well in the back half of the year, like Foot Locker, like Nordstrom, like Target, and many other various retailers that just haven't been performing in this market, right? Because we've been in a goods recession. So if we're seeing as things are going to start to improve, we're going to exit this goods recession and things are going to start to heat up there in the back half of this year and going into next year, then retailers will start to run. And you'll see some pretty epic moves in many of these retailers. You'll also start to see moves in companies like trucking companies. You'll start to see moves in the railroad operators, right? Because we've been in a very huge goods recession, right? If we're seeing as things get better from here, then guess who's going to benefit in a massive way? Trucking companies are going to benefit. Railroad operators are going to benefit, right? And so you actually see accelerating stock prices from those companies over the next, I would say, 6 to 9 months, if that's what's going to end up playing out here, right? And you'll see many of these high growth companies, even the non-profitable ones, catching a bid and a big bid at that, right? And so that's kind of the next move here. As long as the economy stays decent, we don't have any kind of like black swan events, something that happens that shakes up everybody and gets everybody super panicked again or something like that. And if this market continues to move up, those are the type of stocks you'll see next that will perform amazing. Now, that doesn't mean big tech stocks won't perform. It's just going to mean those stocks are going to potentially underperform many of these stocks, right? And it's an interesting time you go through where some of those big tech stocks that you would think just are going to continue to perform amazing could actually get outperformed by these sleepier companies like a railroad operator, like a trucking company, like a retailer, right? It wouldn't be as surprising to see some of the high growth nonprofit stocks outperform, because you say, well, those are kind of riskier plays. So if people want to take risk, like they're going to flock to those sorts of stocks, right? But these are sort of sleepy stocks that you wouldn't usually think about these sorts of companies outperforming an NVIDIA or an AMD or even a Tesla or a Meta or any of those sorts of stocks. But don't be surprised if this market continues to roll higher. These are the ones that actually start outperforming significantly for the remainder 5 months of this year, okay? That's what's going on there. Now, I think a super important stock to pay attention to is Amazon. Amazon of big tech is seen as usually like the riskiest play. It usually trades at about the highest PE ratios that you're going to pretty much find, for those big tech type companies, right? And so if you really want to know how risk on this market wants to go, pay attention to Amazon. Pay attention to Amazon this week. Amazon's report earnings this week, right? Stocks performed pretty darn good this year, 54%. But do remember, this stock fell 50% plus peak to trough last year. So for right now, Amazon's just gotten back a lot of its gains. Amazon's not sitting at an all-time high right now. There's a lot of stocks that are in that big tech category that are at their all-time highs or very dang close, okay? NVIDIA's sitting at pretty much an all-time high. We got stocks like AMD that are getting pretty darn close. Meta's getting really dang close, okay? A stock like Amazon, it's still quite a ways away from reaching a new all-time high. I mean, like double-digit percentages, like mid-double-digit percentages away from reaching an all-time high. If Amazon comes in and e-commerce looks like it's going to start to improve, and we hear some pretty good guidance there, and obviously Amazon Web Services, it's a business that everybody pays the most attention to. If we hear good numbers, especially out of AWS, and that things are going to get better from here on when it comes to AWS, growth rates are going to accelerate, look out, okay? Look out. Because Amazon will go on an epic run, and you'll also see what I just played out for you there also simultaneously play out, right? Because if Amazon starts to see an uptick in goods, then you're going to see ultimately many of these retailers go on a run. And guess what else you're going to see? Trucking companies going to run, railroads going to run. If Amazon gives the all clear that, hey, we've bottomed as far as the goods recession, things are going to get better from here on, it's going to affect Amazon stock, but I can tell you it's going to affect a whole lot more than Amazon stock. Now, what am I sitting on going into these Amazon earnings? Okay. By the way, I'm not going to buy Amazon stock over the next few days. I'm pretty sure I won't. Okay. So what am I sitting on personally? Well, I'm sitting on, in the public account, about $140,000 worth of shares going into these earnings, and then I own Amazon in another account or two. So I'm probably sitting on certainly less than $200,000 because this is a main account I own Amazon stock in. So I'm sitting on a little less than $200,000 of Amazon stock going into these earnings. I feel very good, very well on how I'm positioned. My hope is that the stock price goes down on earnings so I can buy more shares, as I just want to continue to load up shares of Amazon. But I got to be honest with you guys, I'm not very confident that the stock's going down. If anything, I think there's upside potential. I think the goods recession is about over for at least the short term, meaning the next several quarters. I think Amazon Web Services could see re-accelerating growth in the back half of this year. On top of that, I believe the cost-cutting measures they've done recently and their watching spending very heavily is going to produce some EPS numbers that are going to be shocking to investors in the back half of this year and at the beginning of 2024. And so therefore, I think if anything, Amazon's probably on its way to 200 versus on its way to 100. My hope is the stock goes down to 100 as I'm a buyer of the stock. My thought is it's probably more on its way to 200, which is why I've had so much urgency this year with buying Amazon shares, because I've kind of seen this whole vision coming and it's kind of playing out the way I thought it was going to play out. We'll see how it all plays out. But my fear is this stock's run into 200 rather than run into 100. My hope is it runs to 100. It's just I'm not very confident of that, okay? So that's kind of where I'm at with Amazon. Now, I was looking over our investor report, which T-Man puts together our investor report each and every week, right? And this is a report we put out for our private group members every single Friday, right? And this gives you a ton of detail into so many different things that you want to know as an investor, what's going on out there, how to look at these things and whatnot. It's a pretty comprehensive report. We're always trying to add new stuff to it to bring out even more value on every Friday basis, right? And so I was just looking over this report here today, and I saw a few things that were very, very interesting that I want to share with you guys. Two things in particular that I think are definitely worth paying attention to. By the way, if you're looking to apply for my private group, check out the description area down there. You can fill out an application, and we can see if you're a good fit to join us in there, and you can get access to all, the million different things you get access to being part of the private group, okay? Now, the first thing is VIX. Seeing the VIX like this just shows me, not only is there not much fear in this market right now, but it shows me that a lot of the bears have kind of given up on a lot of the scariness. And I just think we're in a really tough spot to get people scared, which you need people to be scared if you're going to spike this VIX up. The reason is, let's just think about what investors have gone through. Investors have gone through a once-in-a-100-year Rona, which shut down the worldwide economy, and people were not sure what companies were going to go bankrupt and how that was going to shake up. Okay, so investors have gone through that. Investors have gone through inflation that's about the highest, the highest or the second highest we've seen in the past 50 to 100 years in the United States of America. That was a dramatic event to go through. Investors have been through a Fed that went from full go, pumping money, rates at zero, to full on the brakes, all in a matter of a year, right? Which was crazy to go through. The investors went through earnings and revenues that were skyrocketing in 2021 to all of a sudden tanking or staying flat, and that was a complete surprise because that changes the whole way you got to do your valuations. Investors have been through so much now that our tolerance to get us scared, it's going to need to be a lot because of how many dramatic things. We got, obviously, Russia, Ukraine. We haven't seen something like that happen in how long? Have we seen, since WW2, in terms of, two major countries in Europe having something like that happen? Come on. So we've been through so much. Our tolerance to get us really scared, oh my gosh, and to get this VIX to spike is tough right now. It's really, really tough because of what we've been through. And so in order to get this VIX to spike, and never mind that, we had to go through peak bear sentiment in 2022 when it seemed like everybody was bearish. Every time you'd go on social media, Twitter, every time you go on YouTube, it was nothing but bear posts on why the stock market was going to crash, and it was going to be worse than the great financial crisis, and it was going to be worse than the Great Depression, and we're going to go to S&P 3000 and 2800 and all these sorts of things. And everybody was putting flames in their thumbnails and all that stuff. We had to go through all that, right? So to get us scared now, it's a challenge. It's a challenge because we've been through so much. We've been through so much. The ones that, have been through this market over the years, right? And so that's kind of where we're at now at this point in time, right? And so if you're going to talk about spiking this VIX, you're going to need some crazy, scary stuff to come out of nowhere that takes everybody by surprise. And it's going to need to be on the levels of Rona. And there's so many damn things we've been through over the past couple years and 3 years that I even forget about some stuff. We just went through the regional banks all of a sudden going under. So, the biggest bank failures we've seen since the great financial crisis, I forgot about that. We went through that this year as well. What haven't we been through? My gosh, okay? So that was one thing that definitely caught my attention, caught my eye, that I thought was important. The second thing that really caught my attention in a substantial way is this. What you're looking at is the AI investor sentiment. So how bullish or bearish investors are feeling over the next 6 months. And if you look over the last couple of weeks, right, bears are starting to throw in the towel. And they're starting to throw it in substantially, especially over the past, I'd say, month or two. This week, we're at 24% of people are bearish on the market the next 6 months. Last week, we were at 21.5%. The historical average, you should usually see this at about a 31% number. That's a very normal number, right? The 1-year bearish high, keep in mind, was one of the highest numbers we've seen in the history of this survey, which this survey goes back decades. This survey, if I recall, goes all the way back to the 80s, the 1980s, okay? That was when I was born, the 80s, okay? We peaked and nearly 61% of investors were bearish on the market the next 6 months. That was probably the biggest bull signal you could ever imagine, right? I can tell you, if you were buying stocks in late September and into October, you made so much money. It's sickening, okay? Absolutely sickening. So bears are starting to get more. Now, the important thing is, I think this is very important, is just because a lot of these bears have thrown in the towel does not mean they've all gone full bull. Some of these bears are starting to come out of hibernation, and what they're starting to do is they're starting to buy some value stocks. Because they're going to look out there, they're going to say, I'm not freaking these bears are not putting money in Tesla, these bears are not putting money in Nvidia or AMD or any of those stocks. But some of these bears are starting to come out of hibernation and switch to the bullish side, but they're doing so by buying more value stocks, okay? So it's very important to keep that in mind. And a lot of them are just kind of going neutral. They're like, you know what? Okay, I've gotten killed on my puts, I've gotten killed on my shorts, I'm just going to move to neutral now. I've lost enough money trying to short this market and do this and do that. I'm moving to neutral. And so that's what a lot of these folks have done. So just keep in mind, just because they went from not being as bearish does not mean they went full bullish, okay? Now, I want to give a big warning to everybody out there, okay? This is mainly for folks that got in this market in the past year. Listen, a lot of you guys got in at the perfect time. If you got in this market in the second half of 2022 or at any point this year, you have had it very easy. The market obviously bottomed in October and has pretty much been in a straight up line since then. And many of the more popular stocks have done tremendous, okay? Now, what that leads to is laziness. I heard from a lady recently, and, she took the approach of like, I don't need to learn balance sheets. I don't need to learn income statements. I don't need to learn any of this stuff because what I'm doing is working just fine. I just, put money in stocks and they just go up. And I'm just like, you have no clue on what's coming and how bad you're going to be hurt. There was the same exact approach people took at, the people that came in kind of the Rona crash and started buying in, April, May, June of 2020 and kind of got that huge boost up in the market, right? A lot of those people thought, why do I need to learn anything? Why do I need to learn about a P/E ratio and how this works and how to value a stock and how to project growth in a stock and what margins are and why margins can move around and what can affect those margins and why should I learn about business models? I just put some money in stocks and I just make a bunch of money. And this leads to huge amounts of laziness. And I just see from some of these folks, I'm like, they will pay the price. When will they pay the price? I don't know. Maybe it's 6 months from now. Maybe it's a year from now. Maybe it's 2 years from now. Maybe it's 3 years from now. I promise you they will pay the price. They will end up underperforming the market long term. They're going to get caught into a lot of bad habits. The best times to usually get started is in a tougher market in general. I got started in 08, 09, right? Obviously, we know what was happening during 08, 09. Great financial crisis, a lot of fear in the market. And I just got started with a lot of very good habits in like learning to read investor reports, annual reports, 10Qs, income statements, balance sheets, right? Like the important stuff that you have to learn, conference calls, all this stuff. I got started in very good habits, and I carry those habits 15 plus years later, even after all my success and all the money I made and all those sorts of things. I still doing the same exact stuff. I'm still going through all my company's reports every single week. Still going through conference calls. Listen to conference calls sometimes 2 or 3 times. Listen to investor presentations. All the fundamental work you need to put in to be successful long term. And so if you're somebody that just got in the market in the last 6 to 12 months and you think this is just easy, I don't need to learn anything, you will pay the price. I promise you that. And ask the people that got started in the market in 2020 that were like, I don't really need to learn any of this stuff. I'm just put money in stocks and they go up. Oh, it's easy. They paid the price, and they paid the price handsomely. And you will pay the price as well if you don't know what you're doing in this game. The ones that know what they're doing make it through the bear markets. Make it through. I made it through that bear market. It was ugly. It slapped me around nasty style, but I made it through to the other side. The ones that don't know what they're doing, they don't even make it to the other side. And they have to leave investing or they give up on investing. You've got to know what you're doing in this game, or it will come back to bite you in a substantial way. So make sure you're constantly learning, okay? I put out free workshops for you guys all the time on the channel. Make sure you're getting access to those, okay? If you want to take your investing game up to a much higher level and you want to learn directly from me in all the videos I put out, then apply to join the private group. But I'm telling you, continue your education in this game. It will pay you a lot of dividends long term, and you'll make it through those bear markets and make it out to the other side, and then you'll prosper in the bull markets, right? Which is exactly my game plan. I survived the bear markets, and then the bull markets, oh lordy, do I make a lot of money. I appreciate everybody joining me as always. Much love, folks. Thanks for being subscribed. Hope you got a lot of value out of today's video, and have a great day.